If you're new here, welcome. If you're returning, welcome back. And today we're talking about the best part, the holy grail of Market Cipher B, which is our money flow. Now, you guys know I teach you why the market moves the way that it does, and I'm going to teach you why money flow is your holy grail indicator, okay? There are two reasons why it is important. Number one, I always teach you to follow the money. And just like vector candles, money flow, it's in the name, is the money. Self-explanatory. The second reason it is the holy grail of Market Cipher is it serves as a filter, okay? In the last video, we talked about divergences and we talked about how you can catch the tops and the bottoms of the market. But the money flow is going to act as your actual filter to whether or not you're going to get in the trade and whether or not you're going to be holding it for an extensive period of time. Okay, so we're going to play a game here. We're going to play what's the difference between what we will call Divergence 1 and Divergence 2. I'll give you guys 1 second. Cool. Divergence 1 had a decent dump. However, it got bought right back up and we swept the high again. So if you shorted on Divergence 1 and you put your stop above the high, expecting us to clear out the range and come a lot lower, you probably would have gotten stopped out. Whereas Divergence 2, you can see very clearly we actually managed to get our large move to the downside. Now, without your money flow, you can't see the difference on Market Cipher B, okay? You could argue that we had, what CryptoFace will call the anchor, trigger. I don't use that terminology. In my next video, I'm going to teach you guys the terminology that I do use. So make sure you subscribe and stick around for that. But without the money flow, guys, there is nothing to filter or something that will further build your confidence that this indeed is the high. Okay, now let's turn the money flow back on. We'll take a look here. Now, what's the difference between Divergence 1 and Divergence 2? I'll give you a second. Bang! Okay, guys, if you got it, you're ahead of the curve. The answer is not only is money flow getting lower over time, but money flow is also diverging. And I think it's time I introduce you to my number one rule when it comes to Market Cipher B. The thicker the money flow, the more chances of divergences. Shouts out to Flopping Groper. Gio, what does that mean, the thicker the money flow? Guys, I'm gonna get to it, okay? Let's analyze what happened here. Money flow was increasing. If you always remember the number one rule, guys, write it on your dog or on your fridge, on your car, I don't care. If you always remember the number one rule, which is the thicker the money flow, the more chances of divergences, you can say confidently that we probably didn't top out over here. Because relative to recent price action, the money flow starts to get very thick. So if you are looking in replay mode, and yes, I understand that replay mode is not the same as in real time, but if you're looking in replay mode and you see money flow is getting thicker, yet we haven't taken this high, you're going to fast forward and you're going to say, Gio said the thicker the money flow, the more chances of divergences. Okay, money flow is pretty thick. We haven't diverged. We're probably going to come up and take the high. Let's fast forward. Let's see what happens. Bang. Wow, Gio was correct. The thicker the money flow, the more chances of divergences. Thank you so much. I made money. Now, when we came up and we took this previous high, what do you see? Do you see money flow thinning out or do you see money flow thickening out? You're right. This is like a Dora episode. Money is thickening out, okay? So money flow is getting thicker. The thicker the money flow, the more chances of divergences. Did you write it on your dog yet? So when we get our kind of manipulated Darth Maul candle here, whatever the case is, what do we know? The thicker the money flow, the more chances of divergences. Well, money flow was very thick, okay? Which means that we could have another divergence here. And if we fast forward a little bit more, you're going to see that we're going to get the divergence here. That is the number one rule. You need to remember it. You need to tell yourself in the mirror every single morning, the thicker the money flow, the more chances of divergences. As long as you know that, you will be successful, okay? Now, I want to explain why this works. Why is this even a thing? Why is it the thicker the money flow, the more chance of divergences? Just like we did in a previous video with our bearish divergences with the momentum waves, we are looking for when they cut the engines off, okay? We're looking for when the loss of momentum happens towards the upside. We start to get that curve and then come to the downside. And money flow, guys, is the holy grail indicator, as I've said many times already. Okay, so now I want to explain why this works, okay? Why does it work? Not only is it following the money, which is the number one thing I advocate for all the time, but you need to remember your order of operations and you need to remember the speed in which your money flow oscillates, okay? Your money flow will take longer to curve down than your momentum waves will, right? Your momentum waves move this fast, your money flow moves this fast. And so if your money flow is going to take, for example, this long to curve down, there is a lot of movement in which your momentum waves can do within that time because your momentum waves oscillate way faster than your money flow. And similarly to how we are trying to identify when they shut the jets off using our divergences with the momentum waves, it is no different with money flow. You are also to be looking for money flow divergences. And so this here should have given you a lot of confidence to short here, which brings me to my first of two strategies when it comes to the money flow. If your money flow is diverging as well as your momentum waves, you have a very strong trade. Remember, money flow is king. You can have a lot of confidence behind your trades and you can really hit the gas on those shorts in this example. And it really comes down to the same thing that I've been saying all video. The thicker the money flow, the more chances of divergences, which means the opposite is true. The thinner the money flow, the less chances of divergences. And if you're getting a divergence while money flow is coming down, bang, there's your entry, baby. So now what do we do if money flow remains thick? Okay, we're not getting the money flow divergences. We're not getting the momentum wave divergences with the money flow divergences. How can we still enter? This brings me to my second strategy. This is called the 1, 2, 3 tap, okay? I called it the 1, 2, 3 tap. So if you ever use it, you make sure you give me credits or I'll come find you. So we're on the 30-minute. Money flow is getting thicker, as you can see. Let's go back in time. Let's say we're trading in real time and we're going to say, all right, Geo says that there's this 1, 2, 3 tap. I'm going to take it in action. I'm going to run you through it, okay? We have relatively thick money flow. There's no divergences. This money flow wave is not lower than this money flow wave, and this momentum wave is not lower than this one. There's no divergences here. There's no trade. Let's move forward, okay? Now we're starting to see we may get a momentum wave divergence, correct? Money flow is still thick. What do we know? The thicker the money flow, the more chances of divergences. Let's continue. Now, this is a perfect example of how you can use your money flow as your filter. A lot of people that are not subscribed to me, so make sure you hit the subscribe button, do not know this rule. They see a bearish divergence with your momentum waves, right? Price is making a significantly higher high while your momentum waves are making a lower high, and they end up shorting it. My 1, 2, 3 tap is very simple. When you have thick money flow, you need to see 3 separate waves of divergences in order for you to consider a trade on that time frame. So this here would be your first tap. This here would be your second tap. There is no trade. We only start looking for trades on the third tap. And we know this. We're expecting this ahead of time. You see thick money flow. You see the first divergence. You're saying, all right, the thicker the money flow, the more chances of divergences. Money flow is pretty thick. I'm going to wait for the third tap because I think that we're going to diverge again. And what happens? Let's forward a little bit. Money flow is getting thicker. Definitely no trade. Bang, you get your next wave of divergence. There's your 1. There's your 2. There's your 3. Your 1, your 2, your 3. Here is where now you are allowed to start looking for trades. And if we continue and we move fast forward, you would have seen that it actually would have worked out. So if money flow is diverging alongside your momentum waves, you are allowed to take the trade on the first divergence. If money flow is thick in the green or thick in the red, you're waiting for that 1, 2, 3 tap. Super simple. Now, I want to show you one recent example. We're back on the 2-hour and we're on Bitcoin. And you can see that we had very thick money flow, okay? Now, over the past week or so, I mean, Bitcoin really didn't do anything. Today, we dumped 5%, 6%, whatever it was. Not enough percent in my opinion. Nonetheless, this was my logic behind this little mini range here breaking to the downside. The thicker the money flow, the more chances of divergences. Look at your red money flow. Do you see any divergences? No, you do not. You have an anchor trigger, which again, I'm going to redefine these waves in my next video, so make sure you stick around. But you have your anchor trigger, but this was not a divergence, and this was definitely not a 3-tap divergence. If money flow was thick as it is here, and this wick came down to take out this low, and this wick came down to take out this low, and we had the 1, 2, 3 tap, then I would have way favored coming to the upside. But we didn't have that. What did we have instead? We had very thick money flow. We know the number one rule is the thicker the money flow, the more chances of divergences. We did not get any divergences. So by default, my bias is to the downside because the thicker the money flow, the more chance of divergences. And we didn't even get 1 divergence, let alone potentially 3 if the money flow was that thick. So of course I was favoring to the downside. What do we have now though, guys? Ooh, now we have a very slight momentum wave divergence. And Now you can see very clearly that we have a money flow bullish divergence as well. And what's the rule? If your money flow is diverging and your momentum waves are diverging, you are allowed to take the trade on the first divergence, okay, or the second tap. You don't need to do the 1, 2, 3 tap. So now, should we be favoring longs or should we be favoring shorts? We should be favoring longs. 100%, because we have our money flow divergence and we have our momentum wave divergences and we have these vector candles. If you don't know what they are, go watch my previous videos. So it is as simple as following the money, guys. And money flow, man, it is so freaking powerful, which is why, guys, all week in my Discord, I've been saying, and my bias has been down, right? Something like this, perhaps. I've been favoring to the downside. I've been favoring taking out the low, because the thicker the money flow, the more chances of divergences, and we never got the divergences. And by the way, guys, I do have a complete Market Cipher B and timeframes bootcamp. It is very difficult. It is very complicated, but it is everything that you need to know. I've been staring at this indicator for 3.5 almost years, and I know it pretty extensively, okay? So I teach it all in this bootcamp. If anyone's interested, the link is in the description down below. In addition to that, since we're here and we're talking about it, if you're looking to purchase Market Cipher, my link is also in the description down below. And you can use discount code TraderGeo. And of course, guys, anybody that helps support me, I very much appreciate you. Thank you very much for allowing me to continue making content for you. Guys, what's the number one rule again? The thicker the money flow, the what? Come on now, I know you know it. But as number one of a rule that it is, it means nothing. If you don't know what I talk about in this video, go watch it.